The recent cut in power tariffs in a few states may have won votes to the respective parties, may have appeased the people in those states, but banks are worried because of the thinking about the impact of such populist measures. If you look at the power tariff cuts affected by at least 3 states already, Delhi, Maharashtra and Haryana, the power tariff cuts are actually a breach of understanding which banks arrived with these companies, with the state governments at the time they restructured the loans of state electricity utilities. Most of these companies are facing financial stress in the last few years because of the absence of periodical revision in tariff. Hence, banks stepped in and they bailed out these companies. They offered a bailout package in September 2012. And one of the primary conditions at the time of recast agreement was these companies should periodically revise their tariffs upwards and make efforts to become financially viable after a period of time by reducing their losses. But what they are doing now is complete opposite, and banks are worried, thinking that this can have huge implications in terms of cash flows for these companies. Banks will have to shell out more money to make these companies viable, and hence, but none of the banks are actually in a position to complain this in public, fearing the repercussions from the political classes and the bureaucracy.